This is Business Incorporated live from Lagos, Nigeria. Thank you for joining us. I'm Chimeze Obi Iwago. On the show today, Nigerian government rolls out new set of extraordinary price-based measures for the tomato market. Banks to accept cows as collateral. Plus, South Africa's political upheaval and credit rating downgrades hinders Barclays' plan to sell its African business and pull out of the continent. Let's get started, and we'll begin with the market. Looking at some of the markets in Africa, the South African JSE was trading higher at intraday, shunning the political tension in the country and the downgrades by rating agencies. The JSE index was up 0.61%. Egypt was also in the green, up by 0.51%. The market here in Nigeria remains subdued, down 0.10% at midday. The Nairobi Stock Exchange closed up 0.11% on Tuesday. And generally, positive first quarter results from banks in the Middle East helped lift confidence in equities, while Saudi Arabia's third largest telecommunications operator jumped by its daily limit after it swung to its first ever quarterly net profit. Shares in Qatar National Bank rose 0.9% after it reported net profit of 3.2 billion riyals in the 3 months to March 31, up 12% from the prior year period and beating forecasts. The Qatar index was up 0.78% at intraday. In Saudi Arabia, banking shares were also outperforming with all but one of the 11 lenders advancing. The index was up 0.85%. The Dubai index was up 0.15%, buoyed by a 1.0% rise in shares of Dubai Islamic Bank, which had reported a 4% rise in first quarter results on Tuesday. Abu Dhabi, however, was in the red, down 0.17%. And European markets moved higher during early trade despite investor concerns over a drumbeat of geopolitical news, which has fueled the buying of safe haven assets such as gold. For details, here is my colleague in Frankfurt, Conrad Busen. Good afternoon, Conrad. Thank you very much for joining us. Now it's Greece. Greece has just handed over control of 14 of its regional airports to German airport operator Fraport, receiving that's 1.2 billion euros in return for the deal. That's a whole lot. Now, what's the buzz around the markets and this transaction?
This is a very, very important deal for Greece and for Fraport, of course. Now, not only the 1.2 billion euros will go to be paid directly into the privatization fund of the Greek Republic, but also the investments that Fraport promised for those airports in Greece can be unleashed. 400 million euros Fraport wants to invest every year into those 14 airports in Greece, among them Thessaloniki, the second biggest airport of Greece, and very famous, holiday islands like Mykonos and Kos and Rhodos and Corfu. That's where you will be when you fly there in the future. A share of what you pay or what your airline pays for using the airport will go to Frankfurt, to Fraport. And that's why they invest, of course, so much money in all those different parts of Greece. I have to say it's an investment and it's money that, makes lots of parts of Greece benefit and creates many new jobs there, which is very good and very important too.
Now, one of the happenings in Germany today is, of course, the meeting of German Chancellor Angela Merkel with her cabinet. They're about to discuss Brexit as well as the negotiating guidelines of the EU before a special summit on April 29. Is this meeting a trading theme today?
Absolutely, especially here in Frankfurt, people are interested in knowing what will be discussed and what will be decided in this meeting, because this will be about which German cities the German government will push forward when it comes to negotiating on the European level about where those EU institutions, which are currently based in London, will be placed on the continent. The banking supervisors, the EBA, European Banking Authority, is situated in London at the moment. Of course, Frankfurt wants this institution to, move to Frankfurt and be united with the banking supervision of the European Central Bank. Paris wants this as well. So we will have to find some compromise. Maybe the other large institutions currently based in London, they're supervising pharmaceutical markets and, healthcare markets. They might be placed in Paris. Something like that, some sort of compromise like that will have to be found.
Now, Conrad, some earnings reports came in today. Talk us through some of these earnings in the box right now. Automaker Daimler and supermarket operator Tesco.
Yes, the cars all look very good. The Daimler numbers, especially strong. Truck business at Daimler goes better than it used to be. And that's very positive news from this car maker, which generally has been pleasing investors for a while now with its, car sales in the passenger car sector. Trucks hadn't been going so well. That's better now. Porsche reported to have sold 60,000 cars during the first quarter of this year. That's a new record for the sports car maker. BMW reported slightly higher sales numbers, and Volkswagen, well, of course, things are not so super at this car maker due to the diesel scandal and, the legal hassles Volkswagen has to deal with. But still, in the core brands, sales also improved. So this is really strong and positive news for the whole sector, pushing the shares of this sector up. What's dragging markets down somewhat, holding equity prices back, is Tesco, the retailer, remember, has a lot of problems with the German competitors, Aldi and Lidl, coming to the UK, investing there, grabbing lots of market share from Tesco. And Tesco had to settle this legal case. 2014, there was, they played with their numbers. They sort of falsified numbers at Tesco, and they had to settle this which cost many million euros to settle, also for